might think that because you're a nonprofit, you don't pay taxes. Well, not exactly. If you have income-generating activities that don't quite match up with your organization's mission, those revenues are considered Unrelated Business Income, or UBI, and that could lead to a surprise tax obligation. Income falls under UBI if it meets the following conditions. It has to be a trade or business, it has to be regularly carried out, and it has to be unrelated to your mission. For example, let's say your nonprofit is dedicated to feeding the hungry. You own your building and still have a mortgage payment, but you don't use the entire facility, so you rent unused space out for private parties and events. The money you collect is unrelated business income, because your nonprofit's mission isn't focused on providing event space to private individuals. Therefore, that income is subject to tax. UBI can also include coffee shop or concession sales to non-members, gift shop sales of unrelated merchandise, or other businesses paying you to advertise on your website or in a publication you generate. Now, that's not to say that UBI is bad. It's not. It means you're making money, which is good for your nonprofit. You just have to report it properly on your IRS Form 990T and pay whatever tax is required. And many times, you actually won't pay any tax because you'll have enough expenses which you can allocate to the activity anyway. But that doesn't change your requirement to report the income in the first place. One other note, UBI does not jeopardize your tax-exempt status, so don't be afraid to complete that 990T accurately. And if you have any questions, check with an experienced nonprofit CPA to clear things up.
Thanks for watching Kickin It With Corinne. To learn more about our nonprofit accounting and business consulting services and watch new episodes when they're released, visit jmco.com/KWC. And don't forget to hit subscribe on our YouTube channel for the latest from James Moore.